Let's also welcome another top guest joining in. Mr. Feroze Azeez, the joint CEO of Anand Rathi Wealth, is now joining in on the program. Warm welcome to you, Mr. Azeez, and good to have you with us on the program. We've been discussing about this current cautiousness that we are looking at into the markets. What would you pen down the reason as to why the markets are unable to sustain onto the gains that they have been periodically clocking in? Is it the absence of the FIIs? Is it the uncertainty around the trade deal? Would you say that there is, the valuation gap still exists? What would you really pen it down to as to why the markets are still on a very, very cautious note?
Yes, so I didn't get the audio as clearly, but I guess the question, like you said, in bits and pieces I could hear.
Okay.
Yes, the market is a little nervous. There is a lot of things in terms of news flow which has got packed. The good news has got factored in. There is a regulatory difference between last year and today in terms of derivative positions. I'll decipher all these or probably break it down for you. One is the GDP data was great. The repo rate cut was a welcome move. This required both these newses should have the potential to create a short covering rally, which didn't happen, which is what most people were expecting. Because the short buildup of FIIs, almost 87% are short and only 14% are long. This kind of positive news 1 year back could have created a short covering rally because FIIs are so negative that they would have got into a spiral unwounding position. But in the meantime, what SEBI has done is capped the long positions in the derivative market. सेबी ने ये कह दिया कि भाई 1,500 करोड़ की डेल्टा के अलावा कोई ले नहीं सकता. So people can't go unlimited long. So that has created a pressure on the long positions can't be astronomical. So that's why you're seeing the short covering rally not happening. Anybody who created positions on the basis of short covering rally happening, they are now disappointed. Once they're disappointed, they are unwinding the trade, is what is happening, in my judgment, over the last few trading sessions.
Absolutely. Feroze, we've been also, having you share a view on the mutual funds way of investments for the last 2 to 3 decades that we've been talking to you about. Now, help me understand, for all our India Today viewers, a lot of them have started off by investing in SIPs, in mutual funds off late. Do help us understand, what would you tell them in this kind of a market? Are they doing the right thing by investing in SIPs even in this downturn? Or if somebody wants to devise a new strategy for 2026 mutual funds, what should they do?
I'm so sorry. I tried my best to lip read you, but the audio seems to be a little disappointing. So you'll have to go back to me and give me the question again.
On the
Or
mutual
somebody needs
fund
to fix
strategy of 2026 for investors, what would you say?
Great. So 2026 strategy will depend on whether you're a trader or an investor. Most people are traders and investors. See, this whole our belief that traders are a separate race and investor are separate race, it may not be true. A person could be investing a large portion of his money and trading. So first, let me tell you the trading strategy. The trading strategy should be long on dips, in my opinion. Why should you be long on dips is because why should you buy on dips is because, see, domestic guys are continuing to get money, and we check it on a daily basis algorithmically. Small cap funds are the first to dry up if the sentiment changes. Small cap funds are getting monies at least 200-300 crores every single day, which means that the Indian domestic player is still sentimentally positive. That's one. The second, FIIs have sold what they had to sell. They sold 11,000 crores so far in December.
Yeah.
They had sold 3,700. These are smaller numbers relative to what could have happened 20,000, 30,000. They sold 78,000 in January, 78,000 crores. So they are at the fag end of their selling rally. In my guesstimate, by February, March, you will see this becoming a positive number. That's the second reason. In derivative market, everybody is short. So if please don't be shorting the market, but buy on dips should be your strategy, at least for the next couple of initial months of calendar year 2026 and the latter part of the December. That's one.
Fantastic.
Investor strategy is great. Let me just take a minute for investors. Investors, I personally think, are very well poised for Nifty to deliver 11% to 12% compounded over the next 3 years. If you chose the sectors right or the funds right or both, you will be able to beat Nifty by 3 to 4%. So there is a 95% chance that you can make 15-16% pre-tax compounded by just being sensible, if not an Einstein, in the equity market.
Fantastic. Thank you so much, Mr. Azeez, for being with us on the show and, of course, helping all our viewers understand what should be their market strategy going forward from here.